All right. Welcome back, man. Today we're gonna get into some crypto education related to decentralized exchanges and centralized exchanges. I'm pretty sure you've heard, well, most mainstream people have probably heard about centralized exchanges like a Coinbase or anything like that. But have you heard what a decentralized exchange is? Probably not. So in today's video, we're gonna go over pros and cons of each, what each offer, don't offer. Um, Things of that nature, give you some education around your options, if you will. Because the best thing to have is options. And the more you know, the more options you have. So, with that being said, let's get right into the content. Okay, so today's video is going to go a little something like this. First, we're going to get into what an exchange actually is, because a lot of people may not know what an exchange is, whether it's a stock exchange or a crypto exchange. So, we'll start there. Then we'll get into what a centralized exchange is, and give you some examples as well. Then we'll transition over into what a decentralized exchange, give you some good examples to kind of wrap your head around what those are and some prominent figures in that area of the market. And then I'll give you some pros and cons of both centralized exchanges and decentralized exchanges. And then I'll give you my opinion, what I use, how I use them. And then if you stay tuned, there might be a video alongside this one that gets uploaded that actually gets into how to provide liquidity to a decentralized exchange so that you can start earning a yield on your assets. And really, that's usually the first step outside of staking, validator staking. Outside of that, this is usually the first step people take into getting into the DeFi world, start earning yields on their assets. So might be something you want to pay attention to. With that being said, let's get into it. Let's get into it. All right. So, what is an exchange? Well, exchanges are marketplaces where individuals and institutions alike can buy, sell, and trade assets. Essentially, imagine, a platform or a store that allows customers to trade one thing for another, whether it's crypto, stocks, or foreign exchange. That's essentially what a exchange is in general. There are two types of exchanges, especially in the crypto world. There's centralized exchanges, which are ran by a single company that manages trade activity. Then there are decentralized exchanges, which are not controlled by a company or central authority, and trades happen peer to peer, so user to user, essentially. So, centralized exchanges, as we talked about before, there are different exchanges, one of them being the centralized exchange category. And essentially, what that is a centralized exchange, or CEX for short, is a trading platform operated by a central authority or company. These exchanges operate similar to a stock exchange, where order matching, liquidity provisioning, and security for traders is all offered by that single company or that single central authority. Some key features for centralized exchanges are custodial service. Users can deposit funds, and the platform holds the custody of those funds until a trade is made. And even after that, the assets that the user trades that capital into is custodied and held by that company running the exchange. Um, they utilize an order book system. So CEXs use an order book to match and buy sell orders. So there's essentially, imagine like a book with one side has sales, the other side has buys. And based on the volume for either side, or the demand on either side, the exchange matches trades based off of that, right? Allowing people to buy and sell as they see fit on that platform. And then, of course, high liquidity. So, certain centralized exchanges generally have a deeper liquidity, meaning slippage and the ability to purchase a token without swinging the market one way or another. Centralized exchanges tend to have that as an advantage versus a decentralized exchange. So, deeper liquidity can indeed be a good thing, especially when you're wanting to buy greater amounts of an asset without swinging the market. So, some common examples of centralized exchanges would be a Coinbase. an Uphold, or a Binance. So. Uh, yeah, Binance, being more so overseas, not really offering services in the United States unless you go through Binance US. And then, of course, you have Coinbase and Uphold, which are they support US customers through and through. So some good examples and some options there for centralized exchanges. All right, so the next one. We have decentralized exchanges. Essentially, a decentralized exchange, or a DEX for short, is a peer-to-peer or P2P platform that allows users to trade cryptocurrencies without the need for a centralized authority. So, some key features related to that. It's definitely the no central authority aspect of it. So, unlike centralized exchanges, which are operated by companies, DEXs are built directly on the blockchain network. So they're almost, think of DEX as like an application that lives on the blockchain. Like you could have a DEX that lives on Ethereum, Solana, Flare, um, any of these big name blockchains. I'm pretty sure, I'm almost positive they all have a decentralized exchange or two that is built on that network for trading purposes. Then you have non-custodial. Another key feature of a decentralized exchange, users always retain full control of their private keys and funds, reducing the risk of hacks or mismanagement by an exchange. So when you go or connect your wallet to a decentralized exchange, your assets are still held within your wallet. You're not giving up custody or ownership in any means to the decentralized exchange or smart contract until you deposit those assets in a liquidity pool to earn fees. So it's always good to retain control of your assets. You're not introducing any unnecessary risks or anything like that. So definitely pretty cool. And I mentioned liquidity pools. So an LP for short is, instead of relying on an order book like a centralized exchange, many DEXs use what's called an automated market maker, or AMMs for short, where liquidity providers deposit funds into pools and earn fees from trading activity. So you, as the regular individual that you are, like me or anyone else, we can deposit our assets into pools to earn a yield or earn trading fees. Unlike on a centralized exchange where everything is peer to, or not peer to peer, but order book ran, we have no opportunity to earn on those fees. In the decentralized world of DeFi, we can. So that's always a good thing. All right, moving on to some examples of decentralized exchanges or DEX. You have Uniswap, one of the OGs built on Ethereum. You have Sushi Swap, again, another prominent name built on Ethereum. I believe both of these support multiple networks now, not just Ethereum, but they started on Ethereum. And then, of course, a rising star, SparkDex on the Flare network. I got to give my Flare fam a shout out. You know what I'm saying? I couldn't do this without shouting my Flare fam out. So that's where that came from. But anyway, yeah, these are some good examples of some dexes. They offer not just swaps, but you can farm, put in assets in a liquidity pool. They have some other novelty features, especially SparkDex. They have a decentralized perpetual contract exchange where you can quite literally short and long assets, using perp contracts. So that's pretty cool. Pretty cool. All right, some pros and cons for centralized exchanges. I'll start with the pros, and we always start with love first, and then we get into some being critical. So some pros for the centralized exchanges. I have to mention fiat on ramps. I mean, this is one thing that DEXs, decentralized exchanges, don't really have a lot of, or I haven't really seen decentralized exchanges implement something like this. But I'm starting to see the tide change a little bit. But fiat on ramps, man, and off ramps at that, which basically all those are is it allows for quick cash deposits when wanting to make a purchase and wanting to withdraw for when needing to sell. So being able to move cash from a bank account to your centralized exchange account very seamlessly is a killer feature. It's very basic, but It's really cool. I mean, and it really helps you get access to the assets that you are wanting to purchase or convert dollars into very quickly. Decentralized exchanges, that's one of the faults that I'd have to point out related to decentralized exchanges. Now, this doesn't apply to all centralized exchanges, but certain ones, especially the more popular ones, have deeper liquidity, especially deeper liquidity compared to a decentralized exchange. And deeper liquidity just allows for faster trade execution and less slippage. So you're paying probably the best price outside of platform fees and things of that nature. You're probably paying the best price for that asset that you can get anywhere else. So definitely want to keep that in mind. And then user friendly. Most centralized exchanges have an easy to use interface. It just makes trading very simple, very seamless process, especially if you're not familiar with crypto and digital assets. A very simple, very easy to use interface goes a long way. So I have to give that to centralized exchanges. Some cons. I got to throw security on there, man. Centralized exchanges can be hacked. Being a single point of failure, there's a high risk for assets in a security event. I mean, yeah, a lot of exchanges, you know, don't tend to use vaults or any type of extra security behind the scenes to protect assets. Some do, more so the popular ones, but for the most part, man, centralized exchanges pose a great security risk being a central authority. Have exchanges been hacked before? Yes. Does it happen all the time? No. But this is why I don't keep assets on an exchange in the first place. I always, even if I purchase my assets from a centralized exchange, I eventually, not even eventually, I quickly move them off that exchange and into a wallet that I can control. KYC, which stands for Know Your Customer. Know Your Customer laws remove the privacy of transacting on blockchain. These laws require identity verification. So just about every centralized exchange, you have to give up like your address, your driver's license, facial recognition, social security sometimes. Like you got to give a lot of information to apply or open up a centralized exchange account. So one of the things I don't necessarily like, but it is what it is. And of course, regulation. Crypto regulation is still up in the air. There's been, certain popular centralized exchanges, such as a Coinbase, have been the target and victim of, bad faith, bad acting regulatory regimes, especially with the SEC, who have not helped in making clear laws or rules to the road in terms of digital asset and cryptocurrencies. So until regulation has been solidified, until there has been clear rules to the road established, centralized exchanges will always be open to regulation by enforcement, unfortunately. So anything can happen to a centralized exchange up until then. You just never know. Something that you want to keep in mind. Moving on. So, in regards to DEXs, their pros and cons. Again, starting with the pros. Better token access. DEX platforms tend to have a wider variety of tokens available to trade. For instance, Donald Trump has recently launched his own coin, the Trump coin. You can't buy that, or until today, you couldn't buy it on any centralized exchange, but that Trump token was widely available on a DEX on the Solana network. So if you have some soul and you can access and you know how to access that decentralized exchange, you could have bought that token very, very early on and experienced the gains that a lot of people have experienced. Waiting for a centralized exchange to get it might have missed a move. You never know. That's not financial advice. I'm just giving it an example. P2P transactions. Remember, P2P stands for peer-to-peer. You are allowed to trade directly with user provided liquidity, removing the need of a middleman. So I would much rather trade in this fashion because I know the user provided liquidity, someone's on the other end making that money while I'm making that trade into a different asset. If I'm also participating in the pool, then even though I'm trading in and out of that particular pool for that asset, I'm also getting paid. So, regular everyday people or people who are providing liquidity to earn a yield on their assets, I'd much rather do that versus buying from a centralized exchange if I can help it. That's just me. permissionless access. So anyone can trade on a DEX. You don't need permission. You don't have to give up any KYC or there's none of that on a DEX. So as long as you know how to connect your wallet to that DEX and enter a trade, then you're good to go. No permission needed. I think that's pretty cool. So some cons. Depending on the blockchain, Ethereum, I'm looking at you, you may experience high gas fees, and gas fees are used to pay for the transactions on the network. And then sometimes, in Ethereum's case, you have been paying gas, or there have been gas fees higher than the fees Coinbase or Uphold or any of them charge to trade on their platform. So in those instances, you are better off just going to a centralized exchange. So that is unfortunate that there are still blockchains out there with extremely ridiculously high gas fees, but I digress. Next is smart contract exploits. So it's not just centralized exchanges that have security concerns. There can be security concerns related to a decentralized exchange as well, especially on the smart contract level. So weak smart contract security can have your assets exposed when interacting with these types of contracts. So we've seen bridges get drained. We've seen DEX liquidity get drained. And that is all due to just weak smart contract security. So definitely something you want to look out for. And then, of course, slippage. Due to lower liquidity for some pairs, it really depends, especially it depends on the pair that you're trading, and it depends on the DEX that you're trading it on. But given those factors, the price you pay for an asset could be higher than if you would try and purchase that same asset on a centralized exchange if it's available. So slippage can be a killer, man. You could end up paying more than what you normally would have if you just would have went to a centralized exchange. So definitely some more things that you would have to pay attention to make sure you're getting the best deal when interacting with decentralized exchanges. But each one offers pros and cons. I like decentralized exchanges for some things, and I like centralized exchanges for some things, which gets us right into my opinion. I use both. Both decentralized and centralized exchanges have their advantages and disadvantages. Personally, like I said, I use both. Most DEX platforms that I interact with currently do not offer an easy fiat on-ramp service. Therefore, converting cash into crypto assets has been best on a centralized exchange for me. Decentralized exchanges are best for DeFi activities like providing liquidity, and that's what I normally use them for. And with that being said, man, that is the end of this part of the video. Remember, I'm posting a part two that goes alongside with this video where I show you how to actually provide liquidity to a decentralized exchange. In that example, I'll be using SparkDex. So if you're on the Flare network or not, this will be a good video to follow just to get the overall concept under your belt. Be sure to like, share, and subscribe, and I will see you in the next one. Peace.